Boom! What's going on, Investomaniacs? Your boy, a Knight Rider here, and today we've got your Robinhood stock market update of the day. In Illinois, they became the 11th state to legalize recreational weed for adults. So that's a positive for all you marijuana investors out there, and I know there's a lot of you. Hey, and Americans may need a little bit of that as markets fell on Wednesday on word consumer confidence nationwide actually fell to its lowest level since September of 2017. Starbucks and Dunkin brands hit record highs. I like both of these, by the way, although I do have China concerns. Dunkin is up 29% this year, and Starbucks has risen 30%. Wedbush securities analyst Nick Setya, who doesn't even drink coffee, more of a hot chocolate kind of guy. A little bit of hot chocolate. You want some hot chocolate? Anyway, he just upgraded Dunkin from a neutral to outperform thanks to Dunkin's 4-part Java strategy. And it looks pretty similar to Starbucks' 4-part Java strategy. Number 1, streamlined menus. The faster customers can figure out what obscure Arabica bean combo they want, quote, the happier they will be, according to one of Starbucks' menu engineers. Menu engineer, nice title there. Reminds me of when I used to work at Subway as a sandwich artist. For 3 weeks before I got fired. Number 2, more espresso-based drinks. For the first time ever, consumers under 35 years old drank more espresso drinks, like lattes, than hot drip coffee. Number 3, super loyalty programs. We're talking m-commerce, mobile commerce. The ability to see a full menu, order ahead, and gamify buying with rewards leads to orders that are bigger and more frequent. Number 4, tech delivery partnerships. Both coffee brands signed delivery deals with Grubhub, and that is a stock I do not recommend, by the way. The takeaway, coffee consumption isn't a commodity. Oil, copper, coffee, hey, they're all commodities, right? Because they weren't differentiated. One bean, at the end of the day, is pretty much the same as another coffee bean, but the coffee buying experience can be different. Through apps, delivery, and zombie frappuccinos, Starbucks and Dunkin can charge a premium for their coffee, thereby uncommodifying it. Up next, Alphabet's futuristic smart city division, dubbed Sidewalk Labs, unveils its Toronto plan. One city plus one tech company equals Sidewalk Labs. Toronto solicited proposals from private companies to redevelop an empty waterfront neighborhood. Sidewalk Labs won. It's a sister company of Google, a subsidiary of Alphabet, and they just unveiled a 1,500-page multi-volume smart city plan. If Toronto approves, then one corner of the city gets elegantly coated with technology like DWI, driving while incognito mode. This neighborhood superhood, should we call it a superhood? Superhood will be built from scratch with every detail optimized for internet connectedness. Here are a few of them. The sidewalks would expand into a lane of traffic before and after rush hour. Nobody likes loud trucks, so freight delivery would happen underground. This giant awning should protect buildings from snow because winter is coming if you live in Toronto, eh? And everything would be built with mass timber. That's right, wood, which is apparently better for the world than steel and concrete buildings. I thought we were like trying to not cut down trees, but I don't. If they say so, I'll believe them. I don't really follow it. Sidewalk Labs would invest $1 billion in housing, 20% affordable housing, 20% middle class, and 60%, well, probably, I mean, you can take a guess. It's Google. Probably pretty expensive, as well as invest in office space, retail stores, and community centers like parks. The takeaway, it's not trying to take your data. Sidewalk's PR got out ahead of privacy concerns with, quote, Sidewalk Labs does not share urban data, user data, or personal data with Google. Instead, Sidewalk will make money on rent in Toronto. And if other cities buy Sidewalk's plan, it'll charge for its smart city tricks learned in Toronto. Picture real estate development meets tech. WeWork has perfected how to build modern offices. Sidewalk Labs is perfecting how to build modern cities. Well, or at least neighborhoods. Or parts of neighborhoods. Up next, BMW unveils new electric cars to hit 25 models by 2023. The hugely profitable German carmaker's stock has been down on trade war worries and tough new emission regulations in Europe. So it is accelerating plans to cut emissions out altogether with Tesla killing electric cars. Not the first time I've heard that headline, Tesla killer. It's a Tesla killer. The lead engineer, Klaus Vroschlik, I'm not exactly sure if that's how you say that, but that's how I say that, Klaus Vroschlik, made these updates. The Vision M Next. It's basically like an electric Batmobile. Is the Batmobile not electric? I don't really know. I'm Batman. The concept car is not for sale, and probably never will be, but it shows how BMW wants e-cars to be sexy. You know, like Elon did with the Roadster like a decade ago. I don't know. Come on, BMW. It is a pretty kick-ass looking car though, right? And the Vision DC Roadster motorcycle, also a concept vehicle, but an electric motorcycle that looks kind of like a transformer. The big corporate update, BMW will meet its goal of 25 electric models by 2023, 2 years ahead of schedule. Next year, we get an all-electric X3 SUV. That'll be probably a big deal if they do it right. The takeaway, how valuable is Tesla's head start? Back when Americans obsessed over Chevy Suburbans and other SUVs in the mid-2000s, Elon launched an all-electric car company. Now German luxury brands on the shortlist for the affluent Tesla buyers are catching up. Tesla's a pure breed. BMW, Audi, and Mercedes have adapted Darwin style. Until next time, guys, may the market be ever in your favor.